Ladies and gentlemen, welcome back to another video. I'm your host, the Dividend Aristocrat, and today we're going to be taking a look at my newest addition to my portfolio. For today's video, we'll be taking a look at my exact orders into this new company, when I purchased it, what prices I purchased it at, my current holding within the company, and of course some of the company's financial metrics. Now, if you guys do enjoy this type of content and appreciate the transparency, consider subscribing to my channel. I'm on my way to 2K and I'd really appreciate it. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. Now, as always, before we get started, let's take a look at my portfolio dashboard. So as you guys can see, my total amount invested has finally gone up. It's at $31,582 and my current portfolio value is at $45,813. Now, the reason my amount invested has gone up is because I'm now sitting at 23 holdings. Once again, I bought a new position, an entirely new position, which I did not hold in the portfolio up until now. Now, in terms of my performance so far, my total return is at 45%. And this past week, I've seen a decline in price of about $800 for the portfolio, with $530 being lost on Friday alone. Now, in my opinion, that is not a big deal at all. As a long-term investor, I am more focused on my returns in 10, 20, or even 30 years, and not so much my returns in the short term. Now, although I do enjoy seeing my unrealized gains trend upward over time, I do have a very large cash position sitting near $10,000 right now, so I want to deploy this cash on any discounts that I do see in the market. Just to recap, in total, I have earned $1,300 in total from dividend income, and going forward, I am projected to earn $760 per year. Now, that does not include any sort of interest I get from my money market fund for this cash that's sitting on the side. In terms of yield itself, I have a slightly lower yield than many dividend investors at 1.66%. My yield on cost is significantly higher at 2.41%. Now, with my most recent investment, it has brought my amount invested for the year up to $5,876, so we're quickly approaching that $12,000 goal. Now, technically, I have added anywhere between $10,000 to $11,000 into the portfolio this year so far, but unfortunately, a lot of it is still sitting in cash, so I do need to deploy into some assets when I get the chance. Now, without delaying any further, the company that I decided to purchase was Hamilton, ticker symbol BAH. Now, for those of you that don't know, Hamilton is a global consulting firm specializing in management consulting, technology, and engineering services. They help government agencies, corporations, and nonprofit organizations solve complex problems, improve operations, and implement innovative technologies. Their work spans various sectors, including defense, intelligence, healthcare, energy, and financial services. Now, so far, I have invested $1,574.08 into this position. I'm going to show you guys those exact purchases right now in my order history tab. Now, the order history tab is how I keep track of all my purchases and also my dividend income for my portfolio. So in this case, we can see my purchases right here, and we have Hamilton on the 14th and 15th of November. Now, for my first purchase, I purchased 8 shares at $159.26, which amounted to a total order of $12.74.08, and I have 2 more shares on the 15th at $150 per share, or exactly $300 for the total order. Now, for the sake of full transparency, I do want to let you guys know that I do have more limited orders set on this company, and I will purchase more if the stock price continues to trend downwards. So going back to my holdings, we can see that my average price paid was $157.41, and the current price is sitting below that at $149.39. Now, I am perfectly okay with the stock price trending downwards. In the meantime, if it does continue to trend downwards significantly, I'll continue lowering my cost basis as time goes on, but I did want to start a pretty sizable initial position just in case. So here we can see that I have 10 shares purchased in total, and my total change right now is $80 in the negative, or about 5% that I'm down. Now, in terms of dividend income, of course, I haven't earned any dividends just yet, but going forward, each share is expected to pay me $2.04, or because I own 10 total shares, $20.40 over the entire year. Now, the yield on this company is lower, which I do prefer, at 1.37%, and my yield on cost, of course, is lower than that because the stock price has trended downwards, with my total allocation in this position being 3.3%. Now, adding in the rest of my holdings and sorting by allocation, we can see that it's not one of my biggest positions just yet, but it is climbing up there. Right now, it's ranked right after Google at 3.3%, and I do hope to be adding a little bit more into this position if the stock price continues to trend downwards. Now, I'm not sure yet what my goal for allocation is for this just yet. I do think I want to get it to around 5 to 6%, but I do have to keep in mind, of course, that I also have General Dynamics and I also have Northrop Grumman as 2 other positions, which are kind of in the same sector as Hamilton. Now, a lot of Booz Allen's work is in the defense sector, and it has a lot of overlap because of that with General Dynamics and Northrop Grumman, although the nature of the assignments are different because they are more of a consulting firm. So one thing I have been considering is potentially trimming both my GD and NOC positions in order to make room for more Booz Allen Hamilton if the stock price does dip, or I might just keep a smaller position of BAH just in case. So just to show you guys why I decided to purchase this company, it is down pretty significantly in the past 5 days, and even if we look at the 1 month picture, it is still down in the past 1 month. Now looking at the year-to-date period though, we can see that the stock price is still doing pretty well, but it is down from its peak. At some point it was up over 44%, but of course it is down pretty significantly from its peak just a little while ago. Now, Booz Allen Hamilton was not the only company impacted by this. You can see that General Dynamics Corporation has faced some similar headwinds, of course at a much smaller scale because they do trade at a bit of a lower valuation and are a bit more stable of a company. Regardless, I was considering adding more into my position for General Dynamics as well, but since I purchased those shares so long ago at such a discounted price, I'd rather keep that position as is for the time being. Now, just to show you guys where this all fits in, I decided to add them into my Divine Dividend section of my MyPie section of the portfolio. And if we open up that, we can see that, of course, it is here at the bottom at 10 shares and 3.3% of my portfolio weighting. Now, right now, my Divine Dividend section is a little bit overweighted compared to my target at 40%. And so it's not that big of a deal. Come the new year, I am expecting to be adding more money into VOO and SCHD, and that should help balance the portfolio out a decent amount. Now, in terms of my speculative section, we'll have to see what kind of money I'll be putting in there, but for now, I'm going to keep it as is. If you guys have made it this far into the video and are enjoying it so far, consider leaving a like. It helps out the channel a ton. So in order to get a better idea of the company and why I decided to purchase it, we can first look at their earnings call presentation. Now here they have some of their metrics, and we can see that there's strong growth overall in most of these segments, which is something that I'm very happy to see. But of course, since they do work in the defense industry and their work is pretty contract based, it will swing up and down depending on the quarter and year. Now, one important metric that investors tend to look at for these types of companies is their backlog and how much they have in their backlog. So basically, you can see right here that over time, this has been growing pretty aggressively. In the second quarter of 2025, we can see that is at a record amount of backlog. Now, historically, this tends to be their best quarter for the year, so we might see a small decline for the next couple quarters, but we'll have to see again next year whether or not they're able to beat this record. Now, I'm a pretty big fan of this slide in the presentation where they talk about their capital deployment strategy, and you can see right here that it shows a couple different quarters and how it's been growing over time, which is a pretty good thing for shareholders, and the types of capital deployment they have been doing. Now, they have 3 different categories that they divide this into. They have mergers and acquisitions, share repurchases, and quarterly dividends. And you can see right here, the quarterly dividends are usually smaller than their share repurchases, which to me is a very positive sign. As much as I do love dividend investing and I do love dividend income, I prefer they put the money towards share repurchases because that way I don't have as much of a tax implication from those dividends. Now, to me, it is important they grow those dividends over time, and as we'll see in a little bit, they have been doing a great job at that as well. Now, in terms of mergers and acquisitions, they don't tend to do too many. They did some last quarter at 94.6 million, but this quarter, it seems like nothing so far. Now, investors have not been too happy about the recent news of Booz Allen Hamilton investing more money into starfish space, so we'll have to see how that pans out in the future, but that definitely helped send the stock price downwards, so hopefully it'll pan out for them in the long run. Now, in terms of yearly metrics, we can see here that it has been growing over time, with 2022 being a pretty intensive year where they did much more mergers and acquisitions than usual. At the same time, their share repurchases in 2022 were also larger, which is very good because the stock price was in a bit of a slump during that time period. Now, for 2025, they have been putting most of their money into share repurchases, which is good to see, and their dividend has been growing pretty strongly as well. Now, here they update their financial outlook for the full year fiscal 2025 guidance, and everything here is pretty positive overall. The revenue growth for their updated guidance, is 11 to 13%, and the original guidance was only 8 to 11%, so this is pretty strong growth. Now, as we can see right here, their outlook for their adjusted diluted earnings per share has also been revised from 580 to 605 per share to a low end of 610 to 630 per share, which is pretty solid. The same can be said for both net cash and free cash flow, which is also very good to see. Now, for their key assumptions, the updates are much smaller and less significant, but we can see here that their average shares outstanding should be between 128 to 129 million, which has been revised down a little bit from the original 128 to 130 million. So before we do end this video, I do want to hop into StockIntent and look at some of their financial metrics and performance, and I'm going to be using StockIntent for that today. Now, StockIntent is a new tool that I have been using recently to do research on different companies, and I've been liking it a lot so far. Now, one thing that's really neat so far is that I can change it from 3 to 5 to 7 or even 10 years, and I can also put custom ranges for the timeframes that I do want to do research on. Now, if you guys do want to try this software tool yourself and you want to support the channel, I'll leave my affiliate link down below so you guys can get a 7-day free trial on the software. With that being said, let's take a look right here at some of the metrics we can see. So over time, revenue is growing pretty strongly, which I do like to see. And they have a pretty large market cap at 23 billion, which to me doesn't matter that much, but at least it's not too small of a company. Now, in terms of their price to earnings ratio, we can see it's a little bit higher at 28.04, but this company trades at a premium for a reason. It is a faster growing company than many other defense contractors. Their profitability metrics are pretty strong, and although they look pretty low, 23.64 for their gross margins and 7.25 for their net margins, like I said before, the government does tend to limit the amount you can profit off of their work. Compared to many other companies in the sector, it is still very strong. Now we can see here both their net income and free cash flow, and over time it is trending upwards. Of course, it can be offset by capex investments or one-time expenses, but if we take net income off of here, we can see the free cash flow is pretty strong so far. Now going into their financials, there's a couple metrics we can look at here. We have their net margin, which is pretty solid, still at 7%, kind of dipped down a decent amount in 2023. But if we remove that, we can take a look at both revenues and net income. Since we've already seen net income, let's take that off as well. Now here we can see that the revenues are pretty consistent, much more consistent than the net income and free cash flow. So as long as they're able to convert that into free cash flow, they'll be doing well into the future. Now if you do just want to see the table with all the values for each year, you can scroll all the way to the right here and see it for all those different metrics that we just looked at. Now for their balance sheet, they do have a fairly large amount of debt, as you can see right here. It makes up almost half of their total assets, but the company has been able to manage it pretty well so far, so I have faith in them for the time being. Now, like we talked about before, they have been putting a fairly large amount of investments into buying back their stock, and you can see how quickly it's been dropping in the past 10 years with how large their investments have been into buying back those shares. I really do hope they continue this trend, especially since their stock-based compensation is a little bit larger than I would like to see, and going forward, this is going to help their per share metrics pretty significantly. So hopping into their dividend section, we can see that their current pay ratio is at 27.73%, which is pretty strong. Of course, as their free cash flow continues to increase, this pay ratio could actually go down, especially if the free cash flow increase outpaces the dividend increases. This graph right here does show the dividend history, and I'll take off the trailing 12-month dividend and just include the yield and amount paid so far. Now for their yield, we can see that in 2014 it was significantly higher, but their current yield has been sitting between 1 to 2% for quite a long time. Taking that off, we can focus on just their dividend itself, and it's been increasing very quickly over time, and I'm hoping this continues to go on for the foreseeable future. Now the last thing I want to take a look at here is their payout ratio per year based on free cash flow, and it has fluctuated a decent amount because free cash flow has fluctuated over the years, but right now we can see that it's some of the lowest payout ratio that we have had in quite some time. I do think this company is poised to do well in the future, and I'm looking forward to investing in it and buying more if the stock price continues to dip down. As a reminder, if you guys are interested in trying out this tool for yourself, I'll leave a link down in the description below. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my new position in the portfolio, Boozallenhamilton. If you guys did make it to the end of the video, let me know down below whether you're purchasing some of this stock or if you've been purchasing anything else in the meantime. If you want to check out last week's video where I talk about the new milestone that I hit on my portfolio, check out this video right here. And if you want to see how much dividend income my portfolio paid me in October, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.